All right, good morning, everybody. Good morning, good morning. It seems like the Bears are finally getting that rotation down lower. I do have I do have an idea of where I want to possibly get into this, but I want to see what happens first. I want to see what happens first. Today might be a challenging day to just get into something without confirmation. We are indeed still bullish. However, the Bears are starting to rotate price down lower. However, we don't want to sell down here. We want to try to sell as high as possible. And in order to get that, we would need a rotation up higher to get that sell. So, and that's on the ES. I'm pretty sure of course, the NQ is there's always an opportunity to make money on the NQ, always. Always an opportunity to make money on the ES, on the NQ. And of course, so that range breakout. And then we got that second range right here. I'm pretty sure the Bears are going to continue to push this down, but the way, yeah, okay, there it goes. There it goes. There it goes. The Bulls ain't going to let the Bears rotate this down like that. Not without a fight. Not without a fight. Okay. All right, for this, yeah, so the ES, this is definitely a good place for the Bulls to come in. However, right now, based on the structure, price is making its rotation down lower. We do have a double bottom here. However, I do think that there is some more room for downside. I will be looking for price to enter around this range. For right now, I don't believe that price will trade below this though. And if price gets here and you want to try to go for a long, this will be a great opportunity for a risk reward play. I think this low is going to be safer right now. Yeah, I'm thinking that price is going to find support somewhere in this area for the Bears to come back or the Bulls to come in and possibly get a retest of this area, 28, possibly this area right here. I don't think that the Bulls are going to be able to I don't think the Bulls are going to be able to rotate price higher. Not right now. They failed to do so. Yeah, what's up, Katie? The Bulls failed to push price higher. They failed to do so. And so now I think we're going to get this rotation down lower. And all the late Bulls are going to feel it, in my opinion. But like I said, I don't think we're going to trade below this low. We can possibly try to look for a trade somewhere in this area. This will be the best area to look for a long, in my opinion. A long that has great risk reward to where you're not risking your whole account just to make some money. Because I mean, you can get long and short anywhere, but the risk reward has to be there. It has to. And if price doesn't trade into this area, we're going to try to look for opportunities to trap in the bears on the wrong side for that move higher. But like I said before, I think price is rotating down. So now if price is rotating down, we need to look for opportunities to trap the bears in, or I apologize, to trap the bulls in for a short. And the bulls are going to help our shorts out. And who stayed in this move after hours? You know, I stayed in this damn thing. And it hit that 23 target perfectly and bounced. 23 perfectly. I just knew that this short was going to work. It's just apparently I was just too early on it. I was too early on this short earlier in yesterday's stream. So the one thing that I'm glad that I did yesterday was at least get out at break even, allowed it to retest this area right here, recognized that the bears were going to come in right here and hold this short until we got all of our targets hit on this one. We took little to no drawdown on this trade, little to no drawdown on this trade. And I stayed in this trade until about, yeah, right around the close, because I remember it was like, damn, it's like I've been in this trade all damn day. I believe I actually took another short towards the end of the day as well, if I'm not mistaken. I think at 2 o'clock, I added to this position, yeah. So it hit my target at 23. I think I had one more piece going down to 18 just in case it got down there yesterday. As price pumped back up and I saw that there was an area for a short opportunity, I added into this position right here, and the price didn't push past 23, so I just closed it out around 2 o'clock or something, or it was 2 o'clock. Yeah, I closed it out right here with my add-on. So, but like I said, I think this price does continue to roll down lower. I'm actually looking for an entry here at 113, 115 to 113, depending on the price action. Depending on the price action, I'm gonna look for that 15 entry, but I really want that 13 entry. I would prefer to get close to the bottom as possible, just in case. Just in case. I kind of want to get into this entry. Yeah, 13, probably 13 would probably be that level. 13, 14-ish. And I'm willing to scale into this. Well, we'll see. We'll see. I mean, if we get a flash crash down, I want to see how far it goes. I want to see how far it takes it, because I do see a potential for 311. I mean, there is support here at 311. And then our scaling will be almost right at this low. And this will be great risk reward on this trade. You don't have to risk too much on it, because there was that level last week I was looking at 298, because I see that this area of support is right here, potential support. So, but yeah, I do think that price is still going to rotate down lower. You can see that the bears are about to come in. They are about to break this low, but we're gonna wait. I think we have to let the market set itself back up today. So we may not get a trade today, or we may not get We may not get a great trade. I mean, you can trade every day. There's a trade every day, but we may not get a good one. It's the 21st. Okay. So overnight recap. So the Bulls, so overnight, the Bulls did tried rotating price higher. We'll try rotating price higher overnight. And they failed to do so. Yeah, you can see that the Bulls did try coming in overnight. They did. With all this consolidation, the Bulls did try. They tried once, they tried twice, they tried 3 times. They tried to rotate price higher and break above this range, but the selling pressure was too strong, and we got to break down lower. I think we had this morning. I think we had something this morning. I know we have Fed speakers Fed speakers, but if I'm not mistaken, there was something else that came out. At 7:30, if I'm not mistaken. Okay. I just wonder if there was something else that came out earlier today. All right. Yeah, I know we had the Red Book, which no one really pays attention to. I know we have Fed speakers speaking right early before the start of the session. Yeah, what's up? What's up, NQ Trader? What's up? Myth. Yeah, so like I said, if today, I think today is just going to be one of those days where you're just going to have to let the market set up today. I mean, obviously, if you're trading the ES, you're going to have to let the market set itself up. If you're going to trade the NQ, let's actually look at her. Let's look at see what she's done so far. So she got this bounce. She got back into this trading range right here. It looks like they're going to hold it off. I think for at least right now, this may be a strong high for the NQ right now. Let me look at the higher time frame real quick. Let's see. Hey, what's up, man? What's up? Yeah, I think this actually might be a short opportunity right here. This may be a short, but yeah, this may be a short because it looks like they failed here at this level right here. This is going to be that strong high. Yeah, it looks like the bears are trying to short it here. And if the bears are successful in shorting it here, I can see them coming back to possibly retest at 643. Yeah, 643-ish, all the way down here to 643. Nope, there it goes. Look at that short. I know what my baby does. I know what she does. I know what she does. I know what she does.
Man, that was strong push down.
Mm-hmm. Yeah.
No playing around, no BS. Just strong push.
Yeah. So y'all caught that trade, 710. Yeah, what was that? A 30-point trade almost. Yeah, about 30 points. Yeah, so yeah, I think today is just going to be that day where if you're a bull and you don't want to turn bearish, you just have to sit back and wait for the market to slowly rotate back into an area of support because it's too bearish to buy, but it's too bullish to sell as well. So you're just going to have to wait until the bears get their rotation down because I don't think longs are going to work today. But look at
take out yesterday's open.
where's yesterday's open on the NQ?
Yesterday's open. Shoot. 643.
643. No, I just said yeah. Yeah, 643. Yeah.
Take out that big ass candle. Yeah. That pullback was a nice entry to get in, re-enter short though.
Mm-hmm. Yeah.
Longs.
Trap them longs in, baby.
I just picked up an Apex 250K account. I couldn't resist.
I'm just mad that they did that shit. I'm just mad, yo. Like, who else are they like? You know what? I'm gonna let my ego win on this one. Like, why the fuck are they trying to figure out who I am? They must be watching this stream. It's like, dude, ain't no damn way. Ain't no way. This guy's not gambling. He's planning his trades. He's actually using risk reward, and he's showing other people how to do this. Oh, he's a professional trader. He's definitely a professional trader. Yeah, I was like, dude, I'm so mad at that because I wanted to get one. I wanted to get an $18 account to gamble in.
Yeah.
But I'm not doing all that shit. I'm not doing all that.
It's the target.
15K shit. That's easy. That is definitely easy. Well, let me rephrase that. It's easy in a sense. It's doable. It's probably better. Yeah, it's doable. Doable. Yeah.
Easy in the sense like.
You said what?
It's easy in the sense of like doing it over a couple days. I mean, you could do it in one day too, but you probably end up
blowing the account.
Blowing up, and that's what they want.
Yeah. I mean, yeah. But shit, if I get that 250K, I'll trade back with minis, and I'll do the same strategy. I mean, with that $6,500 of drawdown, that's definitely I can have more size. I can do my 10-point targets and then the 15 points and et cetera, blah blah blah. I can get that shit done because if I'm getting $1,200 in micros, I can definitely hit the 12 to 13K with minis. Definitely using the same strategy.
Yeah.
Yeah, using the same strategy. So you can see that the bulls are trading back into this range. But we'll see. The bulls are going to have to trade past this, and the bears are definitely going to defend this. But the structure, we got this higher high, we got this double bottom. I think the bulls are trying to give it his last hoorah. We actually may get a range breakout, actually. We may actually get a retest of this level before we actually go down, apparently. Yeah, I think that's what they're trying to do here. I think we're going to get a retest of this level before we get that move down on the NQ, unless the bears hold it here. But I don't think so. You got the 21 right here, you got the 50 right here, you got these higher highs, and we're still in an overall bullish market. So I mean, don't ever forget that we are still overall bullish, and you can see that on the hour chart. We are still overall bullish. So don't fall for all this red. Don't fall for all that red, because you'll get trapped real quick. All right, let's go back on the non-moving ES. Yeah, I think she's going to chop today, guys, for our ES traders. She's going to chop, and like I wouldn't try to trade anything with ES in the middle. I mean, yeah, you got a bounce right here. However, the ES is not the NQ. You have to get in at a good area and enough. So, as an example, if I were to get in, oh, this is the NQ. What the hell? You have to get in at a good area where the risk reward makes sense on the ES. She's not the NQ. You don't get away with the bullshit you can get away with it on NQ. You really have to pick your spots with her. You see this range right here. She got this range breakout. It looks like she's going to rotate lower. And it looks like she's going to probably trade back into this range. Like I said, we're going to actually put this in our journal. We're looking at that 515, and we got a range of 311 on the ES. So going back to the journal, was there any news release? No, but we did have, and we'll continue to have. Side of the market right now, the market is too bearish to buy, and also it's too bullish to sell. What does that mean? Well, obviously, right now, the bears have momentum. The bears are making their rotation down lower. So obviously, trying to buy into when the bears are trying to rotate price lower, you're going to have to pick your spots. However, the market is still bullish. So being a seller anywhere on the chart is also dangerous. So today is more neutral than anything. Today is basically a neutral day. So I will be waiting for a setup, waiting for more information for a setup. It says, all right, so I do plan on looking at that 315 to 311 area for a trade, for a long trade. I'm looking.
Do we have anything news-wise today? I didn't even look.
No. The only thing we have is we have Fed speakers speaking throughout the day today. That's it. We had the red book, but no one cares about that. No one cares about the producer. But that beige book, if we had a beige book, that's what we want to pay attention to. The beige book is actually what I guess if I remember correctly, actually, just instead of me trying to paraphrase it, it is the beige book and simplify. Yeah, so the beige book is a report published by the Federal Reserve 8 times a year. It is officially known as a summary of the commentary on current economic conditions. The report is based on information collected by each of the 12 Federal Reserve districts from businesses, economists, market experts, and other sources. The Beige Book provides a qualitative overview of the current economic conditions in each district. So basically, the 12 Federal Reserve districts publishes the conditions in each of their districts in this book. And it is believed that obviously Powell is going to be looking at this book when making his rate cut decisions, obviously. So that's why this is important. If you see this on the economic release, make sure that you try to hold off your trades when this is published, because minutes tomorrow we have obviously Nvidia's earnings after the bell. We have the 20-year bond auction. We have existing home sales. Obviously, now the Fed is actually looking at home sales now. So now the home news is now important for the stock market because, like I stated in last night's video, the market is being held up by inflation data and the Fed. So that's why the market is hanging on every word that the Fed says, everything that inflation data is saying, because now that everybody is so addicted to 0% interest rates, what people is speculating is that if the market gets bad enough, Powell will have no choice but to move price or to cut rates down closer to that 0% that everybody had been used to or gotten used to. He's not doing that. That is a tool that the Fed uses from when some real shit hit the fan. Because if they do that shit now, and I guess Godzilla comes out of the ocean and destroys half the economy, well, the only tool in their arsenal is to cut some fucking rates. So they're not doing that unless that happens. So we're going to still trade the charts. You said what?
He said Godzilla comes out of the ocean. We got to cut rates. Godzilla's here.
Cut rates. We got to keep the economy going. We got to fund the military. Shit, Boeing calls, Lockheed Martin calls. Shit, that shit was super skyrocket, yo. The banks, because of all the loans that they have to loan out for all the military equipment, so your bank stocks, your war stocks. I'm pretty sure the biotech stocks will shoot up as well. Pretty sure. Why not? But Powell's not going to do that. That's the only tool that they have in their arsenal to save the rates. So, like I said, we're going to still trade these charts, though. We're going to let these people speculate. We're going to let them buy this market up. We're going to go along for the ride. And once we get that rug pull, which is looking like we're about to get it, actually. I mean, we got a double top here at all-time highs. The way that this thing double top, the way that we got the super run up without no pullback, man, I ain't gonna lie, man. This got me thinking about how Nvidia is gonna come out this afternoon or on Wednesday or tomorrow afternoon. It's got me thinking like, shit, is Nvidia about to tank the market? What you think? What do you think Nvidia is gonna do tomorrow after the close?
And I don't know. That's a good question. It still got me second guessing myself now.
Why?
Just because, like, the structure, the way it was last time, we weren't. Yeah, we weren't. I think the market was down, and then Nvidia came in and saved the day.
Mm-hmm.
The way it is now, so I mean, you know now they can just come in and rocket launch this thing. I don't know.
I mean, that's kind of hard to miss right there. That is definitely hard to miss. That is definitely hard to miss right there. Got that big double top. I mean, we do got this strong. They got this strong low. But the Bulls are currently holding up this area, but I don't think so. I think they're gonna fail, and we're gonna get price to come to trade down here, and we're gonna probably get a rotation up higher today. Shit, both the yeah. So for the NQ trader, so it looks like the ES is not doing anything. So I guess I'll just do some commentary for the NQ. Yeah, honestly, she did exactly what I thought she would do. She went right up to 720. We got that drop at 720. Typical, predictable. I know exactly who you are, NQ. I know who you are. Um, but we'll see. We got that drop at 720. It looks like the Bulls are trying to rotate price higher. I mean, you got VWAP sloping down. You got the 200 EMA sloping down. If the Bulls do get a pop, I think we're going to get a quick pop and then a quick drop, unless the Bulls can trade above these two EMAs. Are you in anything right now?
No, I'm just seeing what it's trying to do. VWAP's holding it right now.
Yeah. Yeah.
On NQ, yeah. It breaks above VWAP.
Yeah, it looks like we're not gonna get any good price action today, man. Yeah. I kind of hate when we get these big news events and it slows down the market completely. And it's hard to get a decent trade because of it. But it's looking like that 22 entry is definitely working out. The 22 entry is definitely working out. So NYA is saying that this week's target for him is 18,876. Hmm. I wonder how the hell I keep doing it. Hmm. Let's see if we can get a strong close above this 200 EMA. Yeah, this will probably get to 30, 33 unless they're trying to get the trade right back into this range at 42. Unless they're trying to get it right back into this range. But I'm looking for about 30, 32 if price continues to trade higher. 30, 32. But yeah, it's looking like that 22 entry on the ES. Well, no, that's not a good risk reward because they're gonna have to trade above this range. And it looks like the bulls or the bears are holding up this range right here. And so the bulls are gonna have to trade into this range and then also break out of this range. While the bears, to be successful, all they got to do is hold out the bottom of this range to push price lower. That's not fun. And we got none of here on the tick strike. None of the things are lighting up right now. There's literally no activity. So I really wonder what's holding the market up. I know we got Fed speakers right now, but I mean, what can they really say that we haven't already heard them say? I mean, they can't really say anything new. Let's see if they're broadcasting it. Okay, so they are broadcasting it. So that means we can. All right, we can do this. All right, that's not the screen. There it is. Yeah, yeah, I think I think this rotates lower, but we'll see though. The Bears are definitely in this area. They're definitely trying to defend it, but we already got a rotation through this range. They tap back into it, got a breakout. So this actually, we'll see. We'll see what happens. We'll see what happens. Because it made it to 24. It made it to 24, but it didn't get to 30. Actually, just let me look at that real quick. Hmm. Yeah, it didn't make it to 30. And that's actually what I think this thing is trying to get to at least 30.
Man, this structure, yeah, it's looking like it's trying to climb to the upside, but I have a feeling that we are going to rotate lower.
Yeah.
To at least like 650 because there's hella orders sitting over there.
Yeah.
Yeah. We want our orders soon.
It says that boy crashed car has failed us. He said what?
And that could come later on in the day though, or you know.
Yeah, I think so too. We've been
yesterday, man. That upset me. I wasn't even trading yesterday. And I was like, man, as soon as it was like 12:15, the market drops. Like, wow. Way to waste our time.
That's why you gotta stay strong, baby. That's why you gotta stay strong. Stay stubborn. Like, nah, damn it, I'm gonna hold this. Yeah, the short sellers definitely got rewarded later on in yesterday's session because, man, that drop was so epic. And I was like, man, I'm so glad I'm a part of it because I would have been pissed if I walked away from the screen and didn't see that opportunity just for it to happen.
Yeah.
What's up, chairs? So I usually trade Top Step. Right now, the platform that I'm using is Top Step X. I believe it's available for everybody. Top Step X, sometimes Apex when I'm gambling, and MFF. Hey man, shit. That's what Apex is for.
The casino, baby.
Yeah. But they was like, nah, they don't want me there. It's like, nah. Apparently I must give them, what's that dude's name? Open mic trader flashbacks. It's like, nah, we can't have nobody like that here.
Yeah.
We need them gambling, baby. But yeah, so yeah. We'll see. I wouldn't get faked out with this. I wouldn't get faked out. All right, so let's see. They're talking.
The Institute's president. And it's our privilege today to host Federal Reserve
Governor is this a replay?
Christopher Waller.
Oh, this streamed
for
an hour ago.
Speech and a discussion of his outlook on the U.S. economy and monetary policy. This is, I believe, the second time we're having Governor Waller since he became a member of the Federal Reserve Board, and we're excited to welcome him back. I think everyone recognizes that Chris has been a significant intellectual leader on the FOMC since its arrival.
One of the things you start to see in the data is that inflation expectations start to move up. And also there was a technical issue about average inflation targeting, which was a good theoretical idea, was extremely badly executed. And the result of this was that we actually ended up having very persistence from these supply shocks, which typically wouldn't have happened. So this is my interpretation of what went on. Let me just finish. Then on the other side, the Fed finally somehow woke up and did something extraordinary for the Federal Reserve. As somebody who's been inside the system, it's usually very conservative, doesn't move very fast when it makes a mistake, and that's very problematic. Instead of being the super tanker that takes 20 miles to turn around, they became a motorboat. And you immediately see that effect on terms of managing expectations, because the inflation expectations settle back down to the level that they were before. And in fact, when you think about the inflation process, inflation expectations are critical. So this work by Nakamura and Steitzen, for example, is very, very cogent on this issue, that a lot of the movements of inflation are actually due to these movements in expected inflation. So I think that this issue of that transmission mechanism is actually also very important, and was very important in this cycle as well. So I have another question about just a clarification, but you may want to respond to that.
Yeah, well, you took objection to what I said, so I guess I'll take a stab at objecting to the objection. I think the Fed did an incredible job, absolutely incredible job of managing long-term inflation expectations through one of the greatest inflation shocks of our lifetime. When inflation was peaking at 9% in the middle of 2022, five-year break-even inflation was still in a 2 to 2.5% range. It never broke. When the Michigan data started to peak at 3.3 for the long-term 5 to 10-year inflation expectations, the number one survey that we have on long-term inflation exptations,
it's looking like the NQ and also the MES might actually
75, 4 in a row. He saw the risk of a de-anchoring.
It does look like they're going to get like a small breakout, a range breakout to the upside.
Right, that central banks are supposed to look through supply side shocks. That's right. That's the textbook answer. But you can't look through 3 persistent shocks that might dislodge long-term inflation expectations, because your number one goal is to make sure that you anchor long-term inflation expectations. And if those supply shocks last too long and they come too quickly, you have that threat. And what I think the Fed did was actually almost textbook 100%
So we're in
correct.
complete agreement on this.
That you wait, you look, and if they last too long and they start to affect the anchor, you go and you go big. Exactly what a textbook response should be. So I don't look back at any of this as a major mistake. I think that the mistake was defining transitory as some sort of monthly or quarterly concept. Transitory should have always been sort of defined with the anchor in mind, that we didn't lose that five-year break even at 2 to 2.5, that we didn't lose the University of Michigan's 5 to 10-year survey or the New York Fed's inflation expectation survey. We can lose 1-year inflation expectations. We can lose 2-year inflation expectations. Those are supply shocks. Those are short-term movements and fluctuations. You're never going to want to or need to control them. But that long end of the yield curve, that inversion that we've had for the longest time since the 1920s, all sits back with one incredible thing. The credibility of the central bank came through stronger than it's ever been after one of the worst inflation shocks that we've ever seen. So I don't think my story of supply over demand is sort of I think it's a very cogent story. I don't think it sits at odds at all with how the Fed operated. And I really think behind the scenes, as I listened to Jay speak through every one of his press conferences, he seemed very comfortable with the supply side story all the way through and seems even more comfortable with it today than he's ever been. So this idea that demand was really a driver, I think is starting to dissipate significantly. And if I hear one more person blame fiscal profligacy for the ills of the world, I think I'm going to vomit. I mean, now they're going to probably tell me that fiscal profligacy starts volcanoes and earthquakes and climate change. It's just amazing how much every CEO under the sun goes on and says, our number one problem is we have too much debt and our deficits are too big and we need to stop that immediately or the world's going to end. It's nuts. Like I come from I come from a Rochester PhD and a Chicago school training, where to me, fiscal policy neutrality was always a lot more important. And the idea that we have big fiscal multipliers just doesn't resonate with me. I don't see them in Japan after 250% debt to GDP ratios. They've spent more money than anybody could ever imagine via the government. And all they've done is crowd out the private sector, not grow, and create almost no multipliers that I could find. So I don't buy the fact that we missed this through fiscal. I don't think the fiscal was nearly as important as everybody says. And I don't think the fiscal Armageddon story that is being pushed by so many today is actually one that, I mean, I certainly don't push it, and I try to push my clients away from believing it. I just don't think it's the story. The story, to me, fits beautifully with a big set of supply shocks that were negative, and now we're enjoying the opposite side of that. How much more, I don't know. And that the demand side was really just a sideshow in the whole thing, and really executed by the Fed to make sure that the anchor did not dislodge. And they get kudos all around for keeping that anchor in place. That's how I would describe that. So that's how I would respond.
Let me ask about the issue of the balance sheet and how it may affect the transmission mechanism, and see it as a positive rather than something as a negative.
Mm-hmm.
So one of the problems of using interest rates as a tool of monetary policy is that you can actually end up with nonlinear events. Okay, and actually have financial stability issues. And I think that's exactly when we sometimes seen the Fed's tightened, and the balance sheet effects are not socialized because they're not held by the Fed. And all of a sudden you have sectors of the financial system which become under a lot of stress. So one potential plus of the ample reserves regime that we have now is that those nonlinear effects are no longer happening because, as you pointed out, and John has talked about this as well, and Lucretia, which is that the losses are now actually
This does look like a good short
sector. They're in fact taken by the
This
government.
definitely looks like a good short on the ES.
Has very little effect on the economy, and particularly.
And that does look like a good short on the NQ.
When we think about this, it can tell us that we have this advantage.
Not gonna lie though,
the interest rate tool
I don't trust it though.
Becomes more usable because we don't have, and I think this is a very interesting issue in thinking about how we would do this. One other thing I think that's.
Can I make a point?
Yeah, good.
I mean, we are having two discussions here. One is what happens when when you go from non-neutral to neutral. And, it's perfectly plausible that there is interaction between the size, the speed at which you decrease the size of the balance sheet and the interest rate. It's just the effect on different parts of the curve. So this is exactly, so it's a question of calibration. But in normal time, so when you are in neutral state, I mean, the ample reserve is, as you say, I mean, the main motivation is that is financial stability. Yeah. So that, and then you have interest rate and expectations, that channel, which has always been, the kind of textbook channel in the kind of models.
You wouldn't be able to win that.
You're right. It works.
Yeah. You wouldn't be able to win that.
So nothing has changed, okay?
Right.
Except that now we have this kind of big financial
right. And I think there's an issue that we sort of like to be in a linear world. So what we've seen actually, which is a huge change, was that we basically were in pretty much a linear world for a very long period of time.
775.
And that's very easy to deal with from point of view monetary policy. You have something go on, think about the recession that occurs in 2000 and 2001. Basically, it was very linear. There's some problems. What do? The Fed cuts rates and the economy returns to recovery. When you get non-linear world, you go off the cliff. So I would teach this. I actually do, if you like the Roadrunner cartoons, I said, here's a great economist explaining what happened during the Great Recession. And it's, of course, the Roadrunner and Wile E. Coyote sits there and then goes off the cliff and then he plummets down. So one of the things actually that we want to think about, and I think John's discussion of mortgage markets is very relevant to this, is how we set things up so in fact we're in a more linear world where the economy doesn't go off the cliff, when in fact monetary policy just can't solve the problem. And I think that's a question of the design of our transmission mechanism, in effect, to make the world more stable. And so I think that's a very key issue in thinking about these balance sheet things. It wasn't necessary, by the way, up until all of a sudden we went into a much more nonlinear world where, in fact, there were these dangers.
This break.
I think one of the issues there is the extent to which banks engage in maturity transformation.
Yeah.
Right. One of the things that gives you the nonlinearity is when there's a lot of maturity transformation in the banking system, and then as we learned in the S&L crisis, raise rates and you blow up part of the system. Now, the modern securitization system of mortgages in this country was intended to get rid of maturity.
And we have Fed Bar speaking in the next.
MBS that would be long-term
man.
investors, bond funds, pension funds, insurance companies, get them out of the banks. That was always the idea. And the problem is the banks keep finding ways to get the MBS back on their balance sheet. Right? This was the problem with First Republic.
Yeah.
And I'm not sure what we do about that. But certainly, one question is how banks are required to account for their holdings of MBS and whether they're required to mark them to market or can treat them as hold to maturity assets. Very interesting issues there, which other people in the room know much more about than me. But I do think trying to get those MBS off bank balance sheets is a part of this building of a linear financial system, to use Rick's phrase.
I do think there's a lot of deals happening today. I think TCW and Wells Fargo just engaged in a deal, but there does seem to be a move in the banking world to push banks to be more of a sourcer of loans, a sourcer of deals, a sourcer of product for those with the long-term liabilities that better match that long-term asset class. And if we can get our banking system to be more of a payment system, lending to the corporates that they know, but then passing those loans back out and sort of finding good homes for them that aren't in places where they're short funded, I think we have a much healthier, stable financial system. And I kind of feel like the regulators are pushing it that way, and maybe, the Bill Nelsons of the world can keep pushing us that way, and there's good people out there that know that story well, and we're going to have a safer and better banking system because of it. I think that's happening, and I see it now with the partnerships that are happening between long-term asset managers and banks, because the asset managers want the loans, and then banks become the conduits for that. I had a question for you on the ECB, because It strikes me that the ECB's view on the balance sheet is much different at the moment than the Fed's. There's a desire to bring it down quickly, as you said. And I see that as a real risk in the European system, as you might expect, and sort of a missing
I know you liked it.
of an opportunity. No. Just for the record, I really like big balance sheets. I think big balance sheets
You
are
do
great.
like them.
Love them.
Okay, great.
I love them because they kind of get almost back to Rick's point, which is they bring us to a higher R. Get away from zero.
First target in Q.
I would have thought the Europeans would go, we don't
What are you looking at?
go back to negative rates. We don't want to go to zero.
I'm gonna get 30 and a quarter.
30 and a quarter.
Going, this sucks.
It's
And now also you have this opportunity to
release
the
for
balance
the
sheet. And it allows you to keep the rate structure at a higher level because you're using more painkiller on the balance sheet.
I'm heavy size with this 250K gambling account.
How much you got into it?
And it keeps you away from zero.
15, baby.
I think it solves an enormous number of problems. I think it'll be the those that don't like the monetary finance.
Yeah, I'm thinking.
Because what it means.
I mean,
is
if they traded past 33,
I mean,
at
that's what,
equilibrium, and the Germans will be upset.
then I think they're trying to get it back to the
again,
bottom of
so
that
this is
range
not
at that
about
46
zero lower
level.
bound. This is about
If they
what
traded
is the
past 43.
size, in the steady state.
But it doesn't look like they're
the
going
actual
to.
size. And I think they want it because because it's not a federation, and so they don't like to hold bond because that means bond of different states, which face different
just
sovereign risk and so on.
to bring
I think that
everybody's
this is
attention,
the reason, okay?
I have
Because,
changed to the
as I
50K
said,
account. I don't think we're going to get a decent
this ample
trade
system that I thought you didn't like makes a lot of sense.
until later on in the
So
session. So
now,
I
whether
have
they
put
will be
my
able they're not going to go back to exactly.
I have put the other account away, and I am trading the 50K.
They also understand,
And I use the
as far as I
50Ks to
understand, that,
just
because I'm now
trade.
out of
If I see it set up, I'm going to take
I
it.
think that they understand
No
that this would be
planning. I'm just
risky
taking
and
the
that,
trade.
we live in a different world than the pre-2008 crisis.
And this
So
will
they
be technically my gambling account right here.
ideally to a smaller balance sheet, but they will go very slowly.
So
And whether they will manage to go back
yeah.
to a relatively small balance sheet, we don't know. Okay, that's why I said this is a natural experiment.
These are not the
Can
planned
central bank
trades.
today,
These are not
with
planned
the
trades
financial
at
market
all.
that we have today,
Let's see what happens.
the demand
Trades,
for,
gambles, like I said.
with the type of liquidity regulations that we have in the market, with the mismatch between the demand for market making and the supply of market making.
Yeah, push my target up to 32.
We will find out because the ECB is.
Sounds dangerous.
Last of these orders.
Johnny, David, I'm just struck by the fact you mentioned your
Yeah, the way it's looking.
and
Let's see.
from that.
Let's see. They got to blast that thing through
the
33.
idea that
They got to blast it through
central
there.
bank should be owning a huge fraction of the liabilities, and that's a good thing. I'll just say it's ironic. Maybe right, but it's ironic.
It is. I feel a little bit.
I mean, if they drop it here,
policy.
they drop it here
with that, which was the sort of the lack of the sort of more Bob Barrow, our government bonds net wealth stuff that keeps me away from thinking fiscal has an enormous impact. On the monetary side, I think I've become a heretic, and I'm okay with it. I've had my come to Jesus moment with the idea that monetary policy.
So it looks like they've had a couple
more
of
than we think, more than I was taught.
since research policy
It's not really a Lucas
evening keynote.
critique sort of problem for me. It's really it's watching it every day.
Here, give me 33 and a quarter. I keep pushing it back.
Maybe it comes back to
I keep moving it up further and further. Nah, I'll take 33 and a quarter. I'll take that.
I do want to clear the air a little bit.
How much you got? How much you up so far?
Story. I think we've unlocked a bit of a something really powerful.
Unrealized 2600, 27.
to society,
26, 27.
policymakers.
You know,
Realized.
And
I
run.
think I took, yeah, because I got stopped out. Oh yeah, it's only 7.
Even though we have
Less than $800.
reserves are, we haven't
Realized.
what
yeah.
any of these concepts are.
Honestly, I'm not gonna lie. Apex kind of helped me realize a lot of things. And Cali Boy, if you're in the audience, I did see your comment after the replay of the stream. And yeah, I'm like, honestly, like I said, that is the purpose of this channel, to show that you don't have to. You can trade with micros and we can make money. You can make it with micros for sure.
They hit 33. Oh.
And dropped, yeah. 33 is a strong level, man. That shit's strong. I mean, we'll see if, I mean, I think they could probably trade past it based on the structure. But I knew they was going to come in at 33.
I don't know how that works exactly. And I don't know.
I still got my exit at 33 and a quarter. Okay, it hit finally. But dang, man, like she be doing dirty stuff like that.
You know,
Don't sit there
the right
play with
answer.
me like that.
The right answer is to take the tool,
Don't tease me. You'll drop a
use
little
it
bit.
for bettering of monetary policy.
My target.
Tell clients, I say, you know,
All right, first one, we got this 200.
you know, you guys in the pharma business and you guys in every
200.
corporate suite we talk
Yeah,
about.
200.
There's no technological advances on the policy side. Well, there are.
Followed
There's
by
massive technological advances.
23%.
If you look back 50 or 100 years.
So if we was in on the ES, we would have got our first 10-point target hit.
To 2020 region,
First 10-point target hit. But like I said, this is not a trade that you ever want to take for real, for real. You got this chop back and forth, and we just only got our first target hit.
So much more than just
We want to get in
25 basis
right
points or
here.
50 basis
This is where we
points
want to get in right here, so we can get that elevator up, baby, not the stairs. Because I think, I mean, if the bulls took the stairs up, you know the bears about to take the elevator down. We just got to figure out where the hell all the bears at. Yo, bears, where you at?
So underappreciated because we kind of just shoved money aside.
Yeah.
I'm thinking.
Reserves don't matter. None of this matters.
Next target. I got it sitting at 42 and a quarter, but
This issue of this tool, and in
I
fact,
might need to
it's
drop
not
that
part
down a
of the
little bit
toolbox
to like
of
41 maybe.
central banks, because we didn't just use it once, we used it a second time.
Maybe a little
And it's
bit.
particularly effective in terms of when economies have a nonlinear hit. So, you know, when you look at both the global financial crisis and COVID,
Oh, that's interesting.
huge nonlinear hits. And so, and it also has a big effect in terms of the modeling that we do. So, in fact,
The RSI on this one is
standard deviation models
overextended.
are completely
Overbought.
So in fact, that was the huge mistake. That and the fact that they didn't deal with the fact that there are different agents and asymmetric information in the story. So I think that
The structure still looks like it
measures
is
matter
so.
Yeah.
something that's actually well accepted in the profession, well accepted in central banks. At one and two, I mean, Bill Friedman in one way won the war about actually thinking long term about monetary policy, but on this one, and Alan Meltzer, who is a very close friend, they were nuts on this. You have horrendous policy. So when you talked about the cases of like Venezuela and so forth, that's not what we're talking about for advanced countries. It's really not the key. So I think that there is a different view here, but it's completely different than the old style.
All right.
They were worried about.
Bet you at 42?
You know, that once you try it, it's like morphine. You can't
I want to try something real quick. Like I said, this is just, I just want to try something real quick.
You know,
I want to try something.
Newly advanced painkillers.
I want to try this.
And they get you off them well, and that's the technological innovation that
I want to try something.
Impart when I make this discussion.
So I want to get one question from the audience.
I'm going to see, so because now that we've traded back into this range, I want to see if the bears are going to come in here.
So you talked about R-star rising. I'm not sure I understood the mechanism, but that's something that we can discuss.
And then we got back into this range.
But clearly, where R-star is very critical to thinking about where the stance of monetary policy is. And unfortunately,
okay, so we got this range breakout.
We don't quite know
So I mean, we got this double bottom.
From an estimation viewpoint, we don't quite know what it is. In fact,
We got this
from,
range
from
breakout.
the audience was how much does fiscal policy affect R-star? And so it's a different kind of mechanism than the one that
And then they're going to probably come back
that you and I had talked about.
probably at this
But on
12.
the other hand, where do we think R-star is, why is it moving, or maybe actually, to me, one of the important aspects of good policy and good monetary policy is admitting what you don't know. The big mistakes in monetary policy have been, we think we know what the natural rate of unemployment is. So the U-star. And in fact, I think that was, again, part of the mistake that the Fed made in the early phases. The great inflation is very much part of that story. And also R-star is very key. Now, one of the ways to deal with this is you don't know.
I'm not going to
you can
lie.
basically do it by the
This is
approach.
definitely
the art of monetary policy, the
definitely
science is important. As an academic who's been involved in research on
definitely.
the science of monetary
So this is what
policy,
I'm going. This is what I'm
very
gonna
proud
do.
of what our
I want to
profession
try
has done
something real quick.
effectively
I want to
monetary
try
policy.
this. I want to.
But we also have to admit
I'm
that
not
we just
confident
don't
in this
know
trade, but I want to
what
try it.
things are. So the issue of R-star, I think, is a critical part of the story.
I am not confident in
And
this trade
the
at all.
question is- the actual question that was asked is, where does fiscal policy play a role in this?
Order filled.
You
But I
also
wanna
have a
try it.
mechanism, which maybe you'll elaborate on, because just you mentioned it and it came out of somewhere, and you obviously have some ideas where it comes from. So why don't we open the floor to this discussion of R-star so that the audience feels that I did my job well as a moderator.
Okay.
And I definitely want to scale back in
I
at
mean, I hate to bring
35.
it back to the balance sheet, but I will, because I think the
Ah,
balance sheet
crap.
has fiscal
This is what I want to do.
implications.
So
We're going to have a
stop.
$7 trillion balance sheet. That's where the
Fine.
equilibrium looks like it's going to end up. We have $34 trillion worth of debt. Everybody gets on, everybody gets on CNBC and goes, oh my God, we got $34 trillion worth of debt. We're never going to be able to pay it back. Our kids have to pay that back. That's $7.5 trillion that sits at the Fed. Will never be paid back. That will always be rolled over
Order
by the
filled.
Fed.
Okay.
It's a perpetual.
I think I'll put this at
liability.
40.
It doesn't have a maturity.
I want to
date.
try
It
this
doesn't have
out.
A
I want to try this
end date.
out.
And in a sense, what running a bigger balance sheet has done is it's eased fiscal policy by allowing us to have $34 trillion of debt, but only go back to the market and roll $27 trillion worth of debt, because the Fed will always soak up that extra $7 trillion. At every auction, the Fed will be there, and they will be replacing bonds that mature with new bonds, and they will be part of that mechanism. So what they have done is made the fiscal burden of the United States go down by running a bigger balance sheet. Again, I think a stimulative activity, which in a way,
Because, and this is what I wanted to try out. I know we're bullish.
Of sorts, because that
I am waiting for
that
this
is the
rotation
pure
down lower.
inflation tax win. That is government.
However, I wanted to
that has
try
been funded by the Fed's
price traded
It's
below
not
this
been funded
range.
by an excise
We got to
tax, a
move
sales
above this
tax, a
range.
VAT. It's been funded by
We
the
swept
Fed.
this liquidity,
So that's a fiscal expansion.
But it could
and I want to see if we're going to get this move
basically
down
now have
versus trading higher,
more fiscal capacity
breaking out of
since-
this range
because
and trading
the
higher.
Federal Reserve has taken this on, and in that sense, you worried less about.
Did the Fed say anything or something to cause that jump like that?
Shit, I don't know.
Actually,
And so forth.
I don't
walked
know.
away.
Something that could work in the opposite direction.
I don't
So
think these guys
still,
are these Fed speakers?
there's, and this is a
I
tough
think
question.
these might be
What the hell
people
is
talking.
R-star
So the
and
Federal
what
Reserve
is it?
monetary policy works through financial markets, blah blah blah. The moderator, so panelists.
Yeah, absolutely, that's right.
So yeah, so this is a professor of economics, a professor of. Oh, so these are professors. Oh, professors.
Funds it
No, but
in the
I
private
mean, we
sector.
care.
And I was
for
like, they don't look like
governance,
feds.
and
Yeah,
that,
yeah.
I mean, that's very important.
They kind of look
because,
exactly
you know,
like professors.
All our governance structure is based on the idea that of the 90s,
But,
central banks' balance sheets were narrow,
Yeah,
and so
we
there was
swept this
responsible
range, and I
variation
wanted to
between
see if they was going to
systemic
take it
monetary.
short.
Once you
I'm
open
not
that
confident in
door,
this trade at all
then you can
because of
see
how
that
bullish we
you
are.
may want to
But I wanted to
consider
try it
other
out.
type of governance design, and that I think that's a very important issue. And this is why I think that although we may, still do monetary policy in the same way, expectation, interest rate as main tools, I mean, we are not really in the same world that we were in the 90s. And so this is, now coming to R-star, I think it's
Let's see
interesting to
where the
compare
NQ's
Europe
at.
and the US.
Yeah,
because,
that would have been a great short on the
we had
NQ.
I mean, we,
Honestly, I
our
think what I'm gonna have to
fiscal
do
policy
is
very
actually,
different.
damn it, I missed the opportunity to short that.
Our growth rate is lower. And I mean, I'm not saying causality here, but there is an association. You know, this maybe gives us some food for thought of how we should think about our stars. And, you know, obviously fiscal policy has an effect on our stars. And that,
okay, so we got to the top of this range
now,
and they
how much it is, I don't know.
shorted price
again,
down.
we will see, you know, the decline of inflation in these two parts of the world. I mean, the difference might be also the different fiscal positions. So again, there is an interaction between monetary and fiscal policy. We always knew it, but with big balance sheet, this interaction is larger. So that.
John?
You know, I think this is just an illustration of the fact that in economics, the most important things are the things that are hardest to ever make progress on.
Well, that's why it's fun.
But it's fun.
Yeah, I mean, this is the reason we became academics. This is fun.
I do think that beyond the issue of the role of fiscal policy is very important, but we shouldn't forget the kind of longer run supply side determinants as well, right? So things like the rate of technology.
All right, let's see what happens in this trade. Let's see what happens in it.
You know, the declining birth rate.
Because if the bulls can hold up at least this area right here at 35, I think we might actually be trading higher back into the 40s actually.
The capital intensity of
And if we do get that move back into the 40s,
are we going to get into an era where
on the ES, then my trades down here, I wouldn't even trust. I wouldn't even trust
a lot of capital and drive up
the limits that I have on my other account. I wouldn't even trust it because that would be too much bearish momentum rotating down.
You know, looking
It'd be too much bearish momentum.
Your way, as you said, Rick, and just figure it out as you go because it's so hard to use prior knowledge.
Yeah, and admit that we don't know, and what that means is that the process of monetary policy frequently has to acknowledge that we don't know.
Yes,
and that may mean that you have to turn things around. So the key success in policymaking, I think, is that you're a learning organization. And you know, I'm very biased. I'm a Fednik. I've been
actually,
in the
you know what?
system in 2 roles.
I do have to actually cut this. Now that I'm looking at the charts.
I'm not. There were some aspects of the.
Let's see if we can kind of get break even. But let's see if they actually break down because
I think they've been better lately. But
if we got this rotation higher,
that's part of the lesson, which is knowing what we
I mean, I would doubt that they're trying to come back
we're also going to operate
here.
in a different fashion. And with that, it just clicked 0.
Because I mean, we got that breakdown
thank you
here.
very much for listening, and hope we.
I mean, this would be the most that it should go. That should be the most it should go. I mean, if this is a real long, then obviously it's going to break above this range. But do we tap back into the same area again? Without having a rotation down lower, taking out some of these orders down here, and then getting that rotation back up higher, back into the 40s. Okay. And again, I just want to see what happens with this trade. I just want to see what happens.
Order filled.
So if I put this right here, price shouldn't trade above this. I mean, even if if this starts to work out, I mean, I'm pretty sure they're going to come back here at the 720 level, possibly. They'll possibly come back in here. So I got to be mindful that, I mean, The bulls may find support here. All right, let's see what happens. I'm thinking, yeah, with the NQ, the NQ requires sacrifice. I mean, we all saw that yesterday. You just can't get into the NQ and think that you can just put your stop at break even +1 in profit and thinking that she's going to allow you to stay in the trade. She wants to reserve the right to stop you out whenever she wants to. You put your stop and break even, she's coming for that stop. She requires sacrifice. So the way that we didn't get an initial reaction, we didn't get an initial reaction here. So yeah, the ES is definitely taking her time. It looks like the AQ is about to roll over. Again, the reason why I took this trade, like I said, for anybody that's joining, I wasn't 100% confident in this trade. This trade was literally just me just looking at the charts and trusting what the charts were kind of telling me. I don't know how far this will rotate down lower though. I just recognized that the market could potentially short here based off the structure, and that's 100% why I took this trade. I don't know if it's going to work or not. But we had a range breakout. We had a double bottom. We have the bulls trading right back into this range. They rejected at the top of this range. And now the bears appear like they're coming in. And I do see it. And then looking at book map, there's nothing but a wall right here. Yeah, we'll probably get, honestly, it'll probably get right here, honestly. If I'm going to be 100% honest with myself, the most we'll probably get is right here. But we actually may get this range rotation down. Yeah, I'm pretty sure. But we'll see. We'll see what happens. We'll see what she does. Right now, obviously the bulls are hanging for dear life on this 21 EMA right now, but I doubt that they hold this. We may need to get a dip right here. He said, what is my win rate, if you don't mind me asking? Last week, so this is the account that I'm trading on stream. I do trade my other accounts, but right now I have a 64% win rate. And all I trade is micros. I've only had one losing day this week, or I guess technically this might be two. But yeah, so yeah, this is me right there. But I hate that it changes that. I don't know why it does that. So this is the ES. This is the NQ. Okay, so obviously the bears are coming in here. So obviously my thesis is right. There are bears here based off of the structure. What I wasn't confident, or what I'm not confident in, is if the bears are going to be successful defending this area because of all the bullishness. And that's why I wanted to take a chance on this in an account that in my let's see what happens account, because I wouldn't be confident taking this trade due to the bullishness, but I do want to see if the bears can hold on to this level. And so far, it looks like the bears are struggling. I mean, they've gotten that move down, but with all this bullish pressure, with all this buying pressure, yeah. With all this buying pressure, we may get a retest of this range right here. And that's a great thing about ES. We'll see. This will definitely be tough. This is definitely a tough trade for bears. I can understand that because of all this bullishness, it's really tough to really commit with the short, even in areas where there's previous supply. It's tough to commit. You got to risk it for the biscuit, apparently. Like our boy Smith says, got to risk it for the biscuit.
Yeah, I think this, at least for the NQ, I think they are trying to. This is a heavy zone though, but
Yeah.
I think they're gonna try to pass this. Unless it drops right here, I think they're gonna try to blast past because it's holding up. They're holding it.
Mm-hmm. I definitely agree. That's why I did not want to take this in our account that we're tracking. And that this trade right here is just, I just want to see what they'll do in this area kind of trade.
Yeah.
I mean, if that doesn't give the Bears hope, I don't know what will. If that don't give them hope. But today I'm gonna have to end the stream around like 10:20. I just remember I have an appointment at 11:30, so we're just cutting it just 30 minutes earlier than we normally would, but I guess if you trust the charts, the charts will trust you. But let's see if the Bulls can, or if the Bears can maintain this, because I mean that's what matters. I mean, obviously I recognize this area to be a short or an area for supply. However, the Bulls have not been giving the Bears their chance to rotate price lower. So now it's like, will the Bears be successful in rotating price downward? That's the new question. And that's what I wanted to kind of test. I mean, we'll see.
You know, I think the Bulls wanted more. I just think that was the Bears' chance right there,
Mm-hmm.
and they did not take it back.
Nope, they definitely did not. Yeah, I'm gonna reduce my risk on this trade because I'm starting to see him come in, and I'm starting to see him come in. I'm starting to see them come in. Yeah. I want to reduce my, I don't want to, I'm going to take this off. I'm going to reduce my risk on the ES trade for sure. Because I'm not necessarily focused on the ES one, on the trade on ES. I really want to see this, I really want the NQ trade though.
Yeah, I think they're going for the 60s.
The 60s, yeah.
Maybe higher. I got my targets, because I'm long, I got my targets sitting at, I want to see 68, 68.50 at least, but that would be nice.
Yeah.
There's orders sitting there in the 60 or 760. Big old heat up there. Heat map on book map. 760s. All right.
No, I'm not gonna put that much risk on. Right above that high. Like I said, I might cut this ES trade. I might cut this. Yeah, because I didn't think that, yeah, it's looking like the Bulls want this a little bit more. But at the same time, I don't want to chicken out of the trade just because the Bulls are trying. I'll just put this. No, that's too much risk. That's 4, 37, 38. No. All right, so let's see. Let's see what the NQ does here. Because I guess if the NQ get a blast higher, and then the ES usually it lags behind the NQ, and then it gets a blast higher as well.
Yeah, we got this, ladies and gents. We got this for sure. It's about to. Oh, speaking too soon. Nah. Nah, I ain't speak too soon. We Gucci.
Mm-hmm.
Give up now, bulls. Whoa, whoa. Kind of vicious.
Yeah, let's
Relax.
see. But actually, let me just really look at this because we got this move into this range. I really want to see. I really want to see this. I really want to see if the bulls would definitely trade past this.
We gotta get to 68. 68. That's all I need. Come on, bulls. I know y'all can do it.
Definitely on NQ. That's interesting.
But this might be because 15 minutes we got 1, 2, 3, 4, 6 green, 15-minute candles. Might be, yeah. I don't know, but I think it's gonna try to take that 760 first at least before dropping. It might fall short of the highest 3. That could happen, but okay, tap into it, but okay, they're pushing liquidity back.
Yeah, if this blast through here, then this is definitely going to go further. Did it tap? Yeah, it took that out. It took that out. It definitely took that out. It took that out. Okay, so let's see. Let's see. Yeah, if we get a green candle here, then yeah, this is going higher. This is definitely going higher. But I mean, obviously in hindsight, this would be a better entry. That would definitely be the better entry right here. I have more room to play with this position. I'm not gonna do that. Yeah, don't fight the Fed. Okay. So the highs at 61. Well, Bears, if you're gonna come in. So This is why, oh, you so long?
Yeah.
Okay. Yeah, so this is why, this is a great example of why I just focus on one. Because if you look at the ES is still showing weakness. I mean, we may get a pop-up, we may get it. But the ES is still showing weakness. And the NQ, even though it's still showing a little bit of weakness, well, I guess that yeah, it's showing weakness as well. But we did get this bullish pop. Did get this bullish pop. Got that bullish pop. Yeah, obviously this was a better short. And this is also a main reason why I usually don't wait for confirmation. This is the main reason why I don't wait for like confirmation. Because by the time the bears kind of confirm, and then okay, that right now, at least for right now, they're in control. Your entries are usually not towards the top. But at the same time, once you get that confirmation, those whip back and forth between the high and your entry, I guess could be mind-boggling, but that's why I just usually limit in and try to get tops and bottoms so I can have that drawdown. Versus now, like if this was a trade that just went south, my entry is all the way down here at 745 because I waited for that confirmation. Versus being up here towards the top where I probably would have got in. And I would have had at least until this candle for risk versus just this candle for risk. Mm. But it looks like the bears are coming in. Are they going to be successful? That's the question. Are they going to be successful?
As much as I love being a bear, I don't know. I don't think they're gonna be successful though.
Yeah. I've lost full faith in bears. I lost full faith in them. But that correction down, man, I want to be a part of that so bad. I really want to be a part of that correction down. And
It might.
go ahead.
I was gonna say it might come later today. Them orders still sitting there at 650. So on NQ.
650?
It might. Yeah, it might come. Maybe they'll try to take out these highs here and then get exhausted and drop.
Yeah. I mean, it looks like the bulls are getting exhausted right now. It looks like the bulls are exhausting up here at these levels. I mean, just looking at Bookmap, I mean, they got such a big giant wall at this level. I mean, if the Bulls are going to be successful, man, they got some work cut out for them, man. But I mean, you got all the EMAs right here. You got the 21. So I mean, even if we do get a drop, I mean, the Bears are going to have to just drop it. They're going to have to drop it. Prices have to get underneath those EMAs, and with them sloping up the way that it is, that's what makes this short trade very. I don't have confidence in it, but I do want to see what the hell happens. And you need some skin in the game for that. Man, I go all the way down there. Hmm. Hmm. Hey, are you keeping up with the NBA playoffs, the series that's going on? Are you keeping up with that at all?
Yeah, I'm keeping track of different series and stuff, but I can't actively watch it because I'll be asleep during that time. Come on early in the morning for me.
Yeah, I just watched the highlights of the series myself. I'm very impressed. Of the Timberwolves. I think everybody's impressed with that team. You have a young leader and Anthony Edwards. He's young. Still a baby, really. And he's beating greats. I mean, he swept Kevin Durant. Like that has to be an ego hit for Kevin Durant. That's crazy. He swept Kevin Durant. He almost swept Jokic. He said what?
He said KD is his favorite player, so coming up.
So you got to sweep him. Couldn't even give him a gentleman's game. A gentleman's game. Had to sweep him. But he almost swept Jokic. I think I don't know who's next in the series. I think is it the Mavs versus the Timberwolves? But man, that's gonna be a heart wrencher. That's gonna be a heart wrencher right there. I know for the Timberwolves fans, finally having somebody that gets their team to the playoff, I know that has to be amazing. Finally feels good to be a Timberwolves fan, even when they had Derrick Rose on it. But I wonder why they say that he reminds everybody of Michael Jordan, unless I'm not really understanding what people mean by that. Of Anthony Edwards. I really don't know what people are talking about with that, but go ahead.
He kind of favors him a little.
You talk about it looks like that he looks like him.
Yeah, like that's Jordan's long lost son. He has that mentality, so.
Mm-hmm. Yeah, I like people with those types of personalities.
Yeah.
Authentic personalities. You don't see authentic personalities in the internet age. All you see is internet personalities. That's it.
I'm gonna dump it right here.
I wish they would just make up their mind and figure out what the hell they're trying to do, because either pump it or dump it. Pump it or dump it. So yeah, this right here, the bulls. So this is crucial. Either the bulls are going to pump this, or the bears have to finish and follow through. So this is the last line. This is the line in the sand for both the bears and the bulls. If the bulls don't, it's not successful here, we getting a drop. We drop it. And as I say it, look at the bulls come right back in. This is like, that was the last cent. Like, yo, why is my break even always support? Like, what's up with that? Why is my break even always freaking support, yo? What's up with that, yo?
Damn.
Hmm. Okay. Okay. I see it. I see it. So on the ES, I think they are trying to come up to this 43 level. If the Bears didn't hold this off, and I think that's what it's trying to do. It looks like the Bulls are just super strong. Even on a choppy day, they're super strong apparently. If this gets taken out, we're definitely going to 43. We're definitely going to 43 if this gets taken out. On the NQ though, it's definitely different on the NQ. This looks like it's about to roll over. Oh crap, did I get that right there? 39, 40.
I'll be back.
All right. Yeah, like I said, I'm going to end the stream about in the next 15 minutes. We're going to see what this position does, because I think that was actually it right there. That was it for the Bulls. They failed to take out that high. They failed to take out that high. But under regular circumstances, that would have been your confirmation right there to take this short. But the market is still bullish. That's what makes this trade difficult. That is so interesting. That is interesting. That's interesting. Bulls definitely do not want to give this up. No matter how many times they fail, they'll just keep buying into this. Yeah, we get this breakout move higher, then I know just to cut this. I know to cut this if we get a breakout higher. So obviously in hindsight.
Order filled.
Okay. All right, so the Bulls weren't, or the Bears weren't able to hold off that area, which now that confirmed, or the Bears weren't able to hold off that area. Or did I get stopped out of this one because of my entry? Ah, shit. Yeah. Yeah. Now, okay. I see it now. I see it. I see it. That's exactly where. Okay. All right. So on the ES, I think price trades to at least 43, and we might see 45 again, or we might see this high right here again, which that doesn't. I mean, if they come back here at 43 and they sell it here at 43, unless I got stopped out because of my entry, and this is actually probably where it's going to collapse at 40. Honestly, I wouldn't be surprised if we get a sell off here at 40, actually. I won't be surprised by that. So that means that the market is trying to get. No way. They don't take out this high, but not before earnings. I don't think they take out that high before earnings. Hmm. 63. Okay. Just make sure. Mm. Hold on, give me a second. Give me a second. Mm. Mhm. It's even making higher highs. Yeah, I'm not surprised by this at all. I'm not surprised. I'm not surprised by this. I got in at 43. Yeah, I still would have been in this trade, but like I said, this is not. Just want to see what happens. But I think I might have gotten in early on this trade. I think this is probably where they run the roll price lower. Might have gotten in too early. I'm looking at the NQ. It's looking like it got to that high. It swept it, and then we got to sweep it at high, and then they sold this down. So, and then they're making higher highs. Higher highs. Of course, yes, of course. I guess it's my fault. Should have. Yeah, I would have found it hard to believe if they actually traded past this range without the bears really coming back in and really trying to take price down, because that doesn't. I mean, I understand that we're in an environment that no longer makes sense. However, that would have been very surprising to me if they actually traded above this. Okay. Let's just like that. And it seems like I keep on for that trade. Oh damn, what's that thing called? What's it called? What's it called? What's it called?
All right, later, guys.
All right.
Let you to go.
Yeah, I'm actually about to cut it here. I got an appointment to get to. Honestly, I think I got into this short too soon. I think now we're going to see this roll over. But like I said, this was a trade that I took in a let's see what happens account. Hopefully nobody followed this one. I wasn't 100% confident on this one. I took it because of the structure. I wanted to see if the Bears was going to defend this. And I wanted to be in a real account, not a sim account. But I think I may have just gotten in too early, honestly. But we'll see. We'll see what happens. We'll see what happens. That's what this account's for. You can see that I almost got ticked out of this trade. I almost got ticked out. But I think I'm going to be successful in this trade now. I think the bulls have exhausted themselves. But look at this price action, though. Look at this price action. So we're making higher highs and we're making higher lows, even though the bears are trying to make their rotation down. And you said 50, so I'm gonna put this right here. I'm gonna put this right here at 666. Why not? Why not? Right there. We'll see what happens.
Yeah.
But yeah, obviously I got in too early with my ES trade, obviously. But all right, guys, I gotta go. We'll come back tomorrow. I'm gonna show you where I'm getting in at if price gets here. So I'm looking for price to retest this area right here. And this is where I believe that if price comes back in, we get these orders filled. We can definitely see that run back up back to this 43 level. We can definitely see it. But if the bulls fail to protect this level, if they fail, I would, in this situation, I would just keep my stop. I would add more risk onto this position just in case I got in too early. And I would have my stop about 3 points below this low. Instead of risking $500, I would risk about 9 on this trade. I think the bulls are going to be successful if price trades into this area. But if it trades below this low, then you're wrong. So, but you don't want to get ticked out and missed it. So this is where I'm going to try to get in at 2 or 3 points below this low. And you should be good with micros. But all right, guys, that's it. We'll do this again tomorrow. Peace out. Peace.
Later.